talking markets right now with Brian Hoops, Midwest Market Solutions. Brian, we're seeing a little bit of movement upward in soybeans, and in particularly in soybean meal. So what's going on in that market?
Well, I think we're supported, Bob, by that census crush number that came out yesterday afternoon, giving us some strength in that meal. It was not only above expectations, but it was, 30 million bushels larger than the September number. So this is the October crush, and it's also a new all-time record, and it beat the December of 2023's number, which was 204 million bushels. So we just shattered it. This was 215.8 million bushels is what they reported. So getting a lot of support off of that in the soybean meal, and some support spilling over into soybeans as well. Now, how much strength can we really get out of this is probably not going to be very long-lived, as traders will put this kind of in their balance sheets, digest it, and then look again to South American weather, which looks very good at this point in time. So there's some seasonal tendencies to try and rally right now, but those rallies are going to be hard-pressed unless things turn adverse, meaning a stretch of dry weather, hot conditions along with that dry weather would certainly spur some short covering. But, we've done pretty well so far by not really just falling out of bed and holding contract lows. And part of that is because of the spreads that we're seeing in the marketplace. Last I looked, December to July corn spread was about 16 cents. And if you go look back at the start of harvest in August or September, that spread was forecasting 37, 38 cents, meaning that the market was going to pay farmers 37 additional cents to store the crop and sell it in July. Well, that storage has really been eclipsed. It's only down to 16 cents right now. So historically, a very tight number. And just telling, the farmer that we don't really want your crop in the summer now. Now we need it today because our exports have improved a lot for corn and for soybeans. And we also had export inspections yesterday. Corn inspections are 31% better than they were a year ago. Wheat inspections are 32% better, and soybeans are now 16% better. That's a marking year high for this year so far. We were way behind soybean sales at the beginning of the marketing season 3 months ago. We've made a lot of ground up in that time frame. A lot of it's due to China, some of that unknown destination buying, and that's helped the front months move higher. So it's interesting that like March and May soybeans have made contract lows where that South American crop is going to hit, but the January contract has not made new lows, and it's an indication that the demand for soybeans and for corn in the front months is pretty strong.
Well, Brian, unexpected strength in the marketplace then. You mentioned China. Any other countries interested?
Well, the biggest buyer is China and the unknown destination, which most of the time turns out to be China. That's true for soybeans. And we've seen Mexico buy a little bit of soybeans. They've been far and away the best customer of U.S. corn. They were an aggressive buyer last year, and they're eclipsing last year's pace so far this year in buying U.S. corn. And a lot of that corn gets shipped by rail down to Mexico. We don't have to put it on a ship or anything, and it's a little cheaper transportation. One of the concerns that we have with all the sales that we've had to China and the unknown destination, especially in soybeans in February, March timeframe, is they may get canceled at some point down the road if we have a big South American crop and prices do end up moving lower after the first year. Those purchases could easily end up being canceled and replaced with South American products, and so that's a concern that we have. Going forward, I don't think there's any chance that these Mexican purchases of U.S. corn would end up being canceled, but there's a very high odds if we have that big crop in South America at lower prices, we will see those cancellations take place.
Brian, are we seeing any maybe interest, or I should say pressure, to buy ahead of rumored increases in tariffs?
Yeah, that's something that we've been talking about for a long time, ever since Trump had kind of taken lead in the polls. That was a possibility. He enacted the tariffs in his first term, and now it looks like he's probably going to enact some tariffs, or at least has threatened it in his second term. Now they have not been put in place, but If they do end up being put in place, there's a very high likelihood that some of those soybean purchases, again, will end up being canceled. So just think of these bean purchases that China has done and the unknown destination has done as hedges against higher prices and against the tariffs. So if we have tariffs in place, most likely South American supplies will be a lot cheaper, and if they're plentiful, they will get canceled, and that certainly will hurt our U.S. prices. So what the market's telling you pretty clearly is to sell your product sooner rather than later, waiting for some sort of a higher price event down the road.
Well, we'll talk a little bit more coming up in an hour and 10 minutes. Also want to talk a little bit about cattle because we're seeing a rally in cattle today as well. But Brian Hoopes, folks want to find out more about Midwest Market Solutions. How can they do that?
Yeah, we would invite you to go to our website, which is MidwestMarketSolutions.com. You can look at our office listings, phone numbers there if you want to contact someone locally in your area. You can sign up for our text service, YouTube video series as well at our website, again, MidwestMarketSolutions.com.